Welcome to the end of day review for Friday, the 1st of March 2024. Starting off with the economic calendar, what we can see is that there was some red folder news only for the New York session. All the red folder news events were negative and thus supported the longs of GBPUSD. And having said that, we then took a long position during the New York session. We took a break even based on our trade from the London session, but we can go through the detail now. Essentially, let's start from the daily. What we do know from the daily is that we had three consecutive bearish candles, with the first bearish day being Tuesday, then Wednesday, and then obviously Thursday being the last bearish day. Thus, for our bias for today, we could only longs, given that the daily bias suggested that we should only long for today. Then, from a 4H perspective, we understand that market structure is bearish from a 4H perspective. This has been the case for quite some time, given that the market is pulling back quite complexly with complexity. And having said that, what we do understand is that the pullback phase was created back in the beginning of February. It then achieved its objective of reaching the pro-trend extreme. However, then what happened is we validated a pro-trend primary leg, but that pro-trend primary leg failed to achieve its ERL objective. We then had demand take control on the 4H with the objective of targeting this unconfirmed lower high right there. This was then last week Thursday, at which point we created a new unconfirmed lower high, but at the same time Friday validated that the pullback phase leg is extended, which then enabled us to validate that the pullback phase last point of supply may provide a number of reactions and potentially even take out the substructure high right here to take us further into the pro-trend extreme, all while keeping in mind that the pro-trend move and the ultimate high probability scenario is that we actually take out the 4-8 swing structure low right here. Having said that, going into the day for today, what we did know is that our daily bias was to long, and thus we had support from the pullback phase last point of supply to enable us to long and trade counter trend against the pro-trend move. Thus meaning that for our focus for the day was purely to long, and from that perspective what we did have was the deepest interaction of the pullback phase last point of supply OB being this point right here. Obviously, like I mentioned previously, this interaction doesn't count because at the time the pullback phase last point of supply wasn't valid, and the fact that at the time of this reaction we didn't actually validate that this leg was still in play. So for those reasons the latest interaction is considered this level right here, and because we have daily bias longs, we don't necessarily have to anchor our fib to the previous high and low of the day, which is in the short direction. Rather we can anchor our fib to actually be the previous low of the day and the extreme. Having said all of that, what we did know this morning is that we were waiting for the Asia low to go, and ideally the Asia high would stay intact, making it an obvious target. But because of this leg and the daily bias, we knew that we could anticipate where the low of the day may form, and that's precisely what price did. It came in, it tagged us and went out. We broke even. There was no reason to actually exit the trade until we reached the ADR right here, and then we also had the confluence of day 2 Asia liquidity, which was unswept. So from those perspectives there was a lot of reason to hold the trade for an 8 hour, but obviously what we did is we actually reached about 4 hour and then, or maybe 3.5 hours, and then we came back, got taken out break even, and the New York session actually validated the London high of the day. At that point in time there was indication to suggest that perhaps we got the daily direction wrong, but there was still the idea of validating that the New York low of the day may hold. And that's precisely what the 5 p.m. New York news did. That was all negative news, which supported why this New York low of the day should hold. We also had this chalk right here, which is a valid chalk. As you can see, we make that pattern with the body break right here. And once we wick this, I was like, okay, I'm going to enter based on the round about 50% level rather than waiting for a precise POI, and that's the entry that you're seeing right here. So that was tagged in and around that area, and I exited the position at 6 p.m. Sorry, at 8, yeah, sorry, 6 p.m. my time, which is this candle right here, and I exited in and around this area, which would have been the end of the 1755 candle. So I took about a 2.5 hour win right there, and then this break even, I did have my stop loss a bit higher to cover spreads and commissions. So there's a little bit of art there, but for all intents and purposes, this is a break-even trade. And the other trade, being the latest trade, is actually a winning trade, which is absolutely great to end the week on. So, having said all of that, I hope you had a good trading week and trading day, and we'll chat again Monday morning for the London Outlook.